Welcome to Celebrity Investing, your go-to source for insights, tips, and updates on navigating the exciting landscape of personal and global finance. Please like, share, and subscribe for more exclusive content. Thinking about investing in Ethereum? Unlike Bitcoin, which is mostly digital gold, Ethereum powers a whole ecosystem. It runs smart contracts, fuels DeFi platforms, and supports thousands of decentralized apps, dApps. The network's flexibility makes it a leader in blockchain innovation. Before buying ETH, it helps to understand how its technology sets it apart and what that means for your portfolio. Let's break it down. Understanding Ethereum's technology and use cases. Ethereum isn't just another cryptocurrency. It's a programmable blockchain that lets developers build anything from financial tools to digital collectibles. Its real value lies in how it works, not just what it stores. Smart contracts, the backbone of Ethereum. Smart contracts self-execute when preset conditions are met. They cut out middlemen, no banks, lawyers, or escrow services slowing things down. Imagine a vending machine. Insert ETH, and the contract delivers exactly what you paid for, with zero human interference. Here's why this matters. Trustless agreements. Code enforces the rules, not people. Lower costs, no fees for intermediaries. Transparency. Every transaction is logged on the blockchain. These contracts power everything from crypto wallets to supply chain tracking. DeFi and Ethereum's role in financial innovation. Decentralized finance, DeFi, turns traditional banking on its head. Instead of relying on institutions, Ethereum lets users lend, borrow, and trade directly with each other. Key DeFi features built on Ethereum. Lending platforms like Aave, where you earn interest on crypto deposits. Decentralized exchanges, DEX such as Uniswap, swapping tokens without a central authority. Stablecoins like DAI, pegged to real-world assets but running on-chain. The result? Faster, cheaper, and more open financial services, NFTs. Ethereum's influence on digital ownership. Ethereum made NFTs mainstream. These tokens prove ownership of digital items, art, music, even virtual real estate. Each NFT is unique, stored securely on Ethereum's blockchain. Examples of NFT use cases. Digital art. Creators sell directly to buyers, keeping more profits. Gaming. Players own in-game assets, weapons, skins, and can trade them. Collectibles. From CryptoPunks to NBA Top Shot, scarcity drives value. For investors, NFTs add another layer to Ethereum's utility, and another reason demand for ETH could grow. Factors influencing Ethereum's value. Ethereum's price isn't just about speculation. It's driven by real-world use, upgrades, and shifting demand. Whether you're holding ETH or considering it, understanding what moves its value helps you make smarter decisions. Ethereum 2.0, the shift to proof of stake. Proof of stake, POS, is a game changer for Ethereum. Instead of miners solving complex puzzles and burning tons of energy, POS lets users validate transactions by locking up ETHs as collateral. Here's why this upgrade matters. Energy efficiency. POS slashes Ethereum's power use by roughly 99%. That's big for sustainability and for attracting eco-conscious investors. Scalability. With sharding and faster transaction speeds, Ethereum 2.0 can handle more users without congestion. This means fewer delays and lower fees for DeFi and NFT trades. Staking rewards. Holding ETH lets you earn passive income, currently around 3 to 5% annually. More staking reduces circulating supply, which can push prices up if demand stays strong. The transition hasn't been smooth, but the long-term payoff could solidify Ethereum's dominance. Market demand and institutional adoption. Ethereum isn't just for crypto enthusiasts anymore. Big players are betting on its ecosystem. Here's how demand shapes its value. Institutional investment. Hedge funds, corporations, and even governments are stashing ETH in treasuries. Grayscale's Ethereum Trust and CME futures contracts show Wall Street is paying attention. Retail adoption. Decentralized apps, dApps, keep users glued to Ethereum. Whether it's trading NFTs, farming yield in DeFi, or playing blockchain games, activity locks ETH in the system, reducing available supply. Competition. Rivals like Solana and Cardano pitch faster speeds or lower fees, but Ethereum's first-mover advantage and developer community make it hard to dethrone. Network effects matter. When more people and institutions use Ethereum for real purposes, not just trading, its value reflects that utility. Key takeaway: Ethereum's price hinges on tech upgrades, demand from both big money and everyday users, and its ability to stay ahead of competitors. Keep an eye on these factors. They're your early warning system for market shifts. Risks and challenges of investing in Ethereum. Ethereum offers exciting opportunities, but like any investment, it comes with risks. Volatility, regulatory changes, and technical hurdles can impact your investment. Let's look at the key challenges you should weigh before jumping in. Regulatory landscape and legal concerns. Governments are still figuring out how to handle crypto. New laws could reshape Ethereum's future. Some countries embrace it, while others restrict or ban it outright. Here's what could change. Tax policies. Governments might increase capital gains taxes or impose stricter reporting rules, making trading less attractive. Bans on DeFi. If regulators crack down on decentralized platforms, Ethereum's financial applications could stall. CBDCs versus ETH. Central banks launching their own digital currencies might compete with Ethereum for adoption. Regulation isn't all bad. Clearer rules could boost institutional trust, but uncertainty remains a risk. Security risks and smart contract vulnerabilities. Ethereum's code isn't foolproof. Hackers exploit weak spots in smart contracts, stealing millions in seconds. Even reputable projects get hit. Past incidents show the dangers. The DAO hack, 2016. A loophole in a DeFi project drained $60 million, forcing Ethereum to roll back transactions, a controversial move. Cross-chain bridge attacks, 2022. Over $2 billion was stolen from bridges linking Ethereum to other blockchains. That's it for part 1. Now that you understand Ethereum's technology and use cases, we'll dive into how to actually invest in it. Stay tuned for part 2. Stay tuned and continue to watch our videos to gain valuable insights into the world of finance. Subscribe, like, and share to continue your journey to financial success.